Please be advised of the disclaimers.
Hey everyone, welcome back to my channel. This is Sai with Pinnacle Trading here. We're going to do a weekly 5-minute market recap. We'll touch base on where the markets are right now, where they're headed, and things about the economy and what I see what I see coming up in the future weeks and future months for this year in the market. So we see markets right now, they had a nice sell-off in the day. We saw a little bit of a gap up, test that resistance at that 380 on S&P 500, and then we had a sell-off at the end of the day. So I'll jump into the overall chart in just a second, but if you're new to the channel, make sure to hit that subscribe button. I do a lot of trading, investing videos, and I show you how to get started and also how to enhance your stock market education and your stock market level with trading, investing, and just overall management itself. So let's jump into it. So we see overall chart right now on S&P 500. We see that's pretty extended up. I've been calling for a sell-off for a little bit now, and we're seeing sell-offs here and there. And what that means is that big institutions are kind of covering it up. They're selling here and there, not a huge sell-off all of a sudden because they don't want to cause a panic in the markets. So they'll sell off in small chunks, and then once we see the big downward support break, that's where they'll start shake out people in the market, and also just take advantage of that and shake people out. And retail traders like us, like normal people, are usually the ones last to sell. So usually the institutions, Wall Street guys will sell, and then the middle, the hedge funds and all, and then last will be retail traders to sell. So that's usually how it works, and the same thing with buying. So let's jump into the overall chart. So we see S&P 500 made it another new highs again last week, 381.49. So when we look at the Fibonacci chart on this one, this is free to get from the chat room. I'll show you in just a second how to get it. So we're seeing that new highs are being made, so we don't have any retracement, no pullback. So next pullback is all the way right here, 342. Let's just call it 350 area, and 340 to 350 area. And the previous support, the double bottom bounce, was at that 320 area. So that's the main areas I'm watching for now. Short term, in the next couple weeks or until end of January, I'm just watching 370 and 360 because those have been the big bounces off the support right there. But overall, in the next couple months, I'm watching the 350 and 320, and then the big 300 area. If we do break the 300 area, that's going to be more than 50% retracement, so it's going to be a solid sell-off, more than 10 to 20% sell-off on that one. Let's go back into the normal chart, and to get that Fibonacci chart, you can get that in the education section. Just click on the pinned messages, and that's where you can see how to get the Fibonacci for the Thinkorswim, how to import that in there. And also, if you are in the chat room, this is a free chat room for everyone to join. Link is in the description below. I talked about why I'm staying 100% in cash, why I sold all my long-term investing positions, and the last one I sold today was Pfizer, that I caught that last week at 36.82 and sold today at 37.5. So nice 2-3% return on that one. But I basically talked about why market cycle is very important right now. So we can see that, you know, we're at the thrill, that's where we were a couple months ago, end of last year, and right now we're in the euphoria phase, which means that everybody wants to make money in the market. They think everybody's going to be rich. They think it's, you know, it's very easy to be in the market, and that's where we want to be very careful. So like Buffett says, be greedy when others are fearful. That's when markets are falling or at the bottom, and you get to good prices, good discounts to buy in, and also be fearful when others are greedy. So there's a lot of greed right now in the market, and it's a huge bubble, and we're also seeing a lot of extended stocks. So a good time to be thinking about scaling out. I'm not a financial advisor in any way, but it's just a good time to think about scaling out if you haven't already, or you know, just look and just be careful in the market and just tread lightly. Also want to talk about the US Treasury yield curve. So we recently started curling back up on this one. So this is a nice recession indicator. This site I use, so you can head over to the main one, treasury.gov. I don't see any chart on that one, but you can see the latest updated official one is 1.15. So this is pretty close enough, but I just like using this one for the chart, and I'll zoom in a little bit on this one. So you can kind of see that, you know, every time in this gray area, every time those treasury yields, those 10-year one especially, went up, we saw a recession, and we saw a global recession and also US recession along with the market crash. So last one was 2008 1.8. So we see that gray area. So we can see that right now we're at the 1.15%. So when we look at this chart going up to 2-3%, that means that that's where the recession happened. And this was a good predictor for that one for the past 7 recessions. So just using past history, things do tend to repeat. They don't have to, but it's just high probability can repeat. So just keep that in mind as well. And they also talked about that on CNBC, where we talked about the rising rates on that one. So just I know they posted that in there. I know I can pull it up from the chat room, where they talked about rising rates in the markets, this article right here. So what rising rates can mean for the market. So just look through this article. It's on CNBC somewhere, but it came out today. But I just look at the 10-year Treasury yield. It rose more than 20 basis points. So that's where they're talking about the yield curve and the recession and all of that. So just keep all of that in mind, and also keep stocks like Tesla in mind, especially just because how big of a bubble it is, and it is in the S&P 500 now. So when that does drop, when that bubble bursts, it's going to bring down the S&P 500 significant amount, and it did start. The bubble did start to burst recently, especially today, because we saw a drop from about 860, 870 pre-market all the way down to test 800. So that's about 60, 70 points overall drop, which was a pretty significant drop. That was almost 8% drop on this stock. And then we saw S&P 500 drop a little bit as well. We dropped about 1 to 2%. About 1% today, but I just keep those kind of things in mind. So I hope this video helped you out, get a more insight on how to kind of read the economy, how to look at the charts. But if you want to get more in depth in chart reading, head over to my website, pinnacletrading.us. You can join the chat room for free. Down here, click that button or the link in the description, and you have all these live trading alerts where I call everything out play by the second when I take the trades. And also, if you want to get more experience, learn how to do charting, how to money management, trading, investment strategies, etc. I offer a course in this, and this is what the course offers. Main thing is stock market education, next trading and investing, and also some of my secrets to you. So if that's something you want to do, take your stock market education to the next level, that's something you can grab. And you can message me in the chat room if you have any questions. So make sure to hit that subscribe button and the like button. I do a 5-minute market recap every week. I try to keep it brief as possible and simple, but I'll be doing another more in-depth video later this week talking about stocks that I'm looking that are very inflated, and the ones to be selling right now. And one of them is obviously going to be Tesla, but I'll go over that more in depth in my next video. So hope you all have a great rest of the week, and thanks for watching, and I'll see you in my next one.